Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk Special Birthday Edition. 54 years old today, and pleased to say that I can finally see the light at the end of the tunnel. Starting off with Alba Mineral Resources, where there's been a decent break of the old August peak at 0.19. Above that, we're looking for 0.29 at that resistance line there from last November, maybe a little bit more, given the way that stocks seem to be still quite perky at the moment. The alpha growth people have gone rather quiet of late, which is interesting, but it may be that they'll start making a bit of noise over the next few days, or even from today. I've had a bear trap gap reversal there, well, at least a double bounce off that 1.4 pence support, and the gap higher as well. The move higher as well through the 50-day and 200-day moving averages. At the moment, we're looking for, at least while we're above the 200-day line at 1.73 on an end-of-day close basis, further progress towards the top of that rising January trend channel as high as 2.8 or 2.9 pence. This stage, everybody back below the top of the gap at 1.6 really delays the upside scenario. But we've had a golden cross in July between the 50-day and 200-day lines, and both of them are now rising, which should mean that we have decent momentum behind the stock. Next up is Chariot. Here you can see that stock breaking this near-term triangle, gapping through the 50-day line at 1.9 pence and the top of that and that June resistance line there as well. So end-of-day close above the 50-day line could be the start of a process where Chariot goes up to that March resistance line projection up to 3 pence. Don't think or don't hope that the shares won't go back below, let's say, the 1.7, 1.8 pence level, but ideally we remain above the 50-day line as we progress for Chariot Oil and Gas. I looked at Cloudcoco recently, but obviously that was before the big move to the upside that we had. In fact, we nearly hit the top of that rising trend channel from December at 2.4 pence today. Come back now to within near-term resistance. So looking for an end-of-day close at 1.6 pence plus, really, to revive the prospect of a move to 2.4 pence. But I suppose you could say the shares have already delivered a decent win for their fans. We were looking for 3 pence to break on Empire Metals last week, and the moment a bit touch and go. End of day close above 3 pence, though, should hopefully bring the shares or allow the shares to pencil in the top of that rising trend channel from February as high as 5 pence over the next 4 to 6 weeks. This stage only really back below 2.5 pence, which has been recent or post mid-August support really for the shares, would delay the upside scenario. The next stock is one I've been told not to look at, so given how stubborn I am, I'm actually going to look at it. Iconic Labs. Here you can see that the shares have genuine, whatever you think about the fundamentals, the shares have been bumping along the bottom, which in this case means 0.01 pence over the course of, I suppose, from the middle of June onwards. While we're above that 0.01 pence area, maybe allow a little bit of wiggle room there, looking for a potential recovery, if only to retest the 0.02 pence area. That is obviously what we've done over the last couple of months. Best case scenario target here, if the shares do eventually get off the ground, would be up to 0.05 pence in that May resistance line projection. But that is a technical view, not a fundamental view on the stock, just for those who are concerned, let's say. Next up is Petra Diamonds, which has a more conventional rebound here. We need an end-of-day close above July intraday resistance at 2 pence. We can get that today, or at least early this week. The 5 pence area at that March resistance line projection could be hit over the next 4 to 6 weeks. This stage only really back below the 50-day line at 1.53 really cancels out or cancels the prospect of further recovery attempts. As we know, at the moment, we're seeing all sorts of minnows revitalize themselves, and Rambler Metals looks like it's going to be the next one. Ideally, we get an end-of-day close above the 50-day moving average. That's at, say, 1.1 pence, and also that would clear post late July resistance for the shares above 1.1 pence, looking for a retest of the 1.6 to 1.8 pence resistance area from July. And obviously just before that as well, we had that area in May and June as well on the daily chart. Moving on to a stock which was in the news, I think a couple of days ago, Seeing Machines. A little tentative break here of this line of resistance from June. I would like to see an end-of-day close really at 3.5 pence plus, so we can get that, then the top of the rising trend channel from May up to 4.7 pence could be on tap over the following month or so. At this stage, already back below the near-term triangle there, 3.1 pence, really delaying the recovery scenario for Seeing Machines. Another stock which has got on the radar today is a riser. We've got Crimson Tide. Here the stock is just breaking out to new higher levels after the gap through the 200-day moving average that we had in June. That's normally an unfilled gap through the 200-day line, normally a lasting signal, although we did actually have that in May as well. Current position is that we've got a rising trend channel that I'm just about to draw here from January. That's currently pointing up to the really up to about the 5 pence area. That could be hit as soon as the end of next month, especially while we hold above 3.5 pence, which has been near-term resistance for the shares. Only back below 3 pence now on the floor of the channel, really delaying the upside scenario. Last stock of the day is arguably the best win for the small caps in the recent past, at least in terms of surprise value and other values as well. We were looking at this around the 0.5 area at the beginning of the month, on the basis that there'd been a brief bear trap below the 0.04 pence area. Current situation is that we've hit the 0.1 pence target that we were looking for once 0.07 pence broke, and we've got now a best case scenario target as high as 0.17, which is that line of resistance from January earlier this year, and that could be hit hopefully over the next 2 to 3 weeks, or the way things are going, the next 2 to 3 days. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.